So it has come a long way if we look at the history of PFM. And if you remember, let me take you back about 20 years. In 2001, Macquarie launched an aggregation using the tech portal tool from a US-based firm called Technology. And in 2008, ANZ Bank launched Money Manager, where they followed somewhat like a mint.com model with the aim of helping not just ANZ Bank customers, but also non-customers with the aim to monetize this type of model. However, it didn't fully capitalize and there was declining usage, and that's why the bank has stopped Money Manager in 2016. We have come quite a long way in these 20 years, where you see on this slide here that we're moving away from PFM to what we call digital money management. So digital money management includes not just budgeting savings, but also looks at forecasting, looks at automated financial advice, for instance, and it also looks at scenario planning. So you can imagine it has gone much broader than when we first started with just data visualizations or looking at just data categorization, for instance. Another thing to note here as well is that digital money management is not one technology that we're talking about, but it consists of a set of tools and technologies to get to the outcomes that you want to achieve for your own customers. And obviously that includes things like digital portfolio management, as well as business financial management. And if we move on to the next slide, and as Tim has mentioned, we conducted this study across Asia Pacific. We have APAC-wide insights here. We also looked into the country level insights from this piece of study that we have. And what we're trying to find out here is to look at the state of the conditions of whether or not they are suitable for consumers to adopt these types of digital money management tools and how they perceive financial wellness, as well as how banks are responding to customer demands for financial wellness. And this is what we found. If you look at the chart on the left, where you see somewhat like a traffic light indication here, what we found is that those consumers across Asia Pacific, those who feel comfortable and informed about their financial situation, they are also less likely to feel stressed out about their financial situation. And these are the consumers from countries such as Australia, New Zealand, from Singapore, as well as from Japan. So these consumers, they feel a lot more comfortable about their situation and less stressed out. The types of countries where we see consumers who are a lot more stressed out, they are not as comfortable, they don't feel as informed about their situation. They're mostly across the Southeast Asian region, from countries such as Vietnam, Malaysia, as well as the Philippines. And when we look at these countries as a whole, we see that there is quite a huge opportunity for banks to play a role to help these consumers feel a lot more informed and comfortable and less stressed out about their situation. However, banks are not top of mind for most consumers when they think about someone or a service provider whom they can reach out to for guidance. As you can see here, they are the third choice or the third option that comes to mind when they want someone to help them, with the exception of India, where banking mobile apps and websites are the top choice. And if we move on to the next slide, and we also find that there is a slight misalignment or mismatch or gap between what consumers want and what banks are prioritizing. As you can see here, consumers across Asia Pacific, they want to be able to check their credit score, they want to schedule some of the recurring bill payments, to aggregate their accounts, to look at subscription management. However, what banks are prioritizing, they are not quite close to what customers want. So consumers across Asia Pacific, they want account aggregation, but as you can see here, account aggregation is at the bottom of the list of what banks are prioritizing. Banks are looking at prioritizing subscription management, which is good because that's also what consumers want. So from here, what we can see is that there is a very strong demand from customers, from their banks, where they want banks to help them manage their payments, and at the same time to look at how they can help them aggregate these accounts. And if we move on to the next slide, However, when we ask banks in terms of how they are responding to consumer demands for financial wellness, there are still a number of very strong challenges that they face. There are barriers to what they can implement and what they can execute. And not surprisingly, the top challenge or the top barrier that we see here are legacy technologies or outdated type of technology. That's not surprising, because as we look at how banks should be able to execute or implement these types of digital money management tools, it gets a little bit difficult because the back-end system cannot keep up with the front-end experiences that they want to provide. So let's take, for instance, when we look at something such as account aggregation. At the heart of it all, in countries where we see open banking starting to advance and progress, at the heart of it all, it's the APIs that are driving such types of data information sharing and exchange. And without a modular architecture, it's almost impossible or very difficult for banks to deliver on such tools that they want to provide for their customers, not just to share data with third-party providers, but also to consume that data to give customers a more holistic view of their financial situation, not just with one bank, but across many different banks. The next two barriers that we see, that includes keeping pace with customers' evolving expectations and having a very in-depth understanding of how their needs are going to change over time. To be able to give something such as personalized recommendations that are contextual and relevant to that particular individual situation and circumstances, it is very difficult to do. Not only do banks need to know about their customers' financial situation currently, but also to predict what they are going to do according to their life stage and to understand what their intent is. So these are the multitude of challenges that we see that will be crucial for banks to overcome in order to provide for those types of digital money management tools or financial wellness outcomes for their customers. And I think a lot of the foundational capabilities need to be in place before we talk about things like personalized recommendation or being able to give them more insights into what they should do. So let's take, for instance, a bank cannot give things like a budget alert if they don't already provide budgeting tools. Or a bank is not able to do spend analysis if they're not already identifying and helping customers categorize these spending transactions. So what we're seeing is that banks are looking to build these types of foundational capabilities before they then take the next step of telling customers what they should do and playing the role of some sort of a financial coach to them.
Yeah. So basically you're saying that they're looking at building foundational capabilities first of all, and that's why there's a misalignment. Is that correct?
Yes, I think that's also partly right. Another part of the picture as well is some banks, they have their hands tied when it comes to digital money management, because some of these capabilities, the level of complexity, the level of difficulty in execution is very difficult. If you remember, I talk about that legacy architecture and the technical limitations that are involved that require very deep integration of real-time digital money management capabilities into the core system. That's what they also struggle with. So some banks are looking to build the foundational capabilities before they get onto the next generation type of digital money management tools, whereas other banks are looking at, what is it that's feasible for our organization to roll out, and that's what they are focusing on. Digital money management is one of the main categories that we looked at in order to see how well banks serve their customers. And one of the banks that is consistently top of our review is the Commonwealth Bank of Australia, where they not only excel in user experience and the functionality, but also around digital money management. And I think a lot of the banks or the clients whom we work with, they always ask me this, which is, what sort of benefits can we get from digital money management? So what the Commonwealth Bank has done is that they have looked at ways to help their customers. They have something called the Benefits Finder, where they help customers look at the rebates or any benefits that they can get to help them in their own financial situation. So for instance, over the COVID period, they have looked at dispersing about $481 million worth of rebates and benefits on their app itself. And some of these benefits include things like pandemic leave, disaster payments, or looking at the SME, small business type of loan from the government. They also looked at Dine and Discover vouchers, where the government has handed out vouchers to consumers so that they can encourage them to dine at different restaurants. So if you think about the $481 million worth of rebates and benefits that have been claimed through the Commonwealth Bank's app, then you can think about the usage level and the adoption level and the engagement level through these mobile apps. So that's one of the biggest business benefits and customer benefits that we see from digital money management. So the bank actually increased their app users from 5.6 million to 6.4 million customers. They also noticed in the month of December 2020, there were almost 7 million app logins per day. And if you look at the mobile NPS, mobile app NPS, it is the highest amongst all the banks in Australia. It is at 37.6, and the average is between 20 and 30. So I think these are some of the business benefits that we're seeing from banks that are doing well and delivering the value to their customers. What's very important when it comes to digital money management is the type of data that you would gather from your customers, right? So maybe one way that I will answer it is to look at what sort of data that you need to collect in order to personalize that type of interactions. An example I can give you is Westpac, which is a bank in Australia. They noticed that their customers have changed their address. So one of the assumptions there is they have moved house. That's why their address has changed. And what they have then decided to do is to look at what are some of the things that this customer might need. And they saw that a couple of those transactions included looking at buying new furniture or new appliances. So what they did was they then surfaced a personalized recommendation for a card that this customer can use in order to get savings on any types of furniture, appliance type of purchases that they have. So this is a card that is very specific and relevant to that customer based on that one data point of them changing the address. So they have done that quite well. Obviously, there are a lot of assumptions in place, and it has to go through a couple rounds of iteration to then understand whether or not this particular customer is actually wanting to buy new stuff and whether they have moved into a new house, for instance. Another way for you to look at it is if you know that you need to understand the life stage of your particular customer. And if you know that this customer has been, saving up for something and they have created a budget, which is to buy a new house, and they've put money into that, how do you then help them achieve that goal of putting money into that particular home saving goal that they have? So a couple of the banks that we've seen, for instance, in Canada, RBC, where they help to identify spare cash for them to put into the savings buckets that they have, and essentially to get to the goals that they want to. So it is to look at, how they interact with you, what sort of, if you already have these tools, what sort of goals that they are setting, and then to personalize the types of services or the types of products that you have for them to help them achieve those goals.
Honest answer is definitely no, because if you look two different segments, one is the traditional banks, and they're, as Z said correctly, they're stuck with the legacy and the whole old age platforms, and compare them with platforms like Grab and other e-commerce players who are very soon going to start digital finance platform. Their agility, their capability to drive new products, new services quickly, and bringing the whole ecosystem together is massive, massive. And we are seeing that the way the Grab quickly launched the Grab Invest, and they're quickly gathering customers for the micro investment size. So that speaks a lot about what the super apps and the platforms going to play. So in APAC, the market is wide open now, while the super apps and the marketplace players are definitely having an edge. Traditional banks are also trying to catch up. They are in a catch-up mode coming out of their legacy to address the same market. The size of the market in APAC is huge. We are talking about a private wealth services or digital finance management of $32 to $35 billion by 2025. And markets like Indonesia, Philippines, Thailand, Vietnam, Malaysia. These are like super growth markets for this digital finance or personal finance space. So that's where banks are also realizing they need to do a lot. And that's where this whole agile modern platform like what Backbase brings onto the table is becoming super critical for them.
Yeah. So Basu, you triggered me on one word. You said banks are catching up, and I believe there's a lot of catching up to do. But I think we also concluded partially that it might be a moving target because they don't have the foundations just yet in place. They're still struggling with their legacy context. So that catching up metaphor, could you translate that into a measurement? Like how will banks know if they are keeping up, yes or no? What are the types of metrics that you would be looking at as an incumbent bank trying to make that leap?
Just see how much as the bank is able to capture the. First of all, they are laggards in the embedded wealth management space. The new word is embedded wealth when you're trying to serve customers with a different key product, but underlying there is a wealth of the personal finance management products. We don't have many such products available by the banks today, but they are trying to define those products. But the super apps, the e-commerce players like Mano, Ubank, they're all offering those kind of because they come from that ecosystem. Now, to kickstart the whole thing, the banks needs an agile and robust platform to start. So it is not how to start; it is when to start. They need to start now, and that's where we are seeing banks are trying to do this. Many of them have started this journey. Many of them are looking for modernized platforms like Backbase and many other few others available in the market, not necessarily as mature like Backbase, to see where and how soon they can kickstart the whole engagement. But it is happening. As we speak, it is happening all across the board, starting from the smaller banks to the large traditional banks.
But if you see last 5 to 7 years, most of the traditional banks have lost the race. They have too many hierarchy, too many silos. Even to do a small project, they require $1 million. On the other side, you can look at fintechs. They have the people where they can do in a smaller scale and with a lower cost than build the same product, and they can implement the product with a very short time frame. And it's true what you mentioned that big players like Apple, Google, and Facebook, they have tons of money. They are also eyeing the banking space. But let's look at the history. Any company or any organization who has a good product and they understand what the customer needs, they are always successful. So we are not worried. So UBank has the best product available in the industry, and we are targeting the right segment of the customer, will be definitely successful. So we are not worried about the other players.
I think when banks are looking to launch these types of digital money management tools is to set the type of expectations of which types of customers and personas and segments whom they want to serve and what types of tools they want to give them, and also to set the types of success metrics from these initiatives. Because what we have seen typically is a lot of these initiatives in the past, they went out and they had huge expectations of who's going to use it, but then the adoption levels don't quite match up to that. And also to remember that it is a process of iteration. It's not that you build a budgeting tool and then you let it sit and then you wait for another 6-12 months before you think about making any changes to that. So if you look at what and if you remember what we talked about in terms of those who feel stressed, anxious, and comfortable and informed early on during the presentation, to really understand who are some of your customers that what we call as, are they carefree spenders? Are they also the stretched spenders that they live paycheck to paycheck and they feel anxious about their financial situation? So these are the segments of customers whom then you would be able to provide budgeting and savings tools, help them plan for their daily expenses, and so on and so forth. And then for those customers whom we call security seekers, they don't feel anxious about, they feel anxious about their financial situation, but they don't live paycheck to paycheck. They're looking at the medium to long-term types of financial goals. And that includes things like being able to retire comfortably, being able to invest in different types of portfolios. That's the wealth management bit that they would be most focused on. So really looking at how do you then personalize these tools to the right audience. And in order to do that, it's all the data and insights that are powering such interactions. So my advice will be to not, if you're just starting out, You don't need to go with the big bang. Start with the small tools and establish and show that you have results from it, and get that to get buy-in from the broader organization before you go on to the more what we call the next generation or the higher level types of tools that include things like personalized recommendations, because that's a little bit harder to do.
One thing we should all remember this, that amongst the large traditional banks, there is no lack of intent to modernize their systems. There is lack of capabilities because they are managing too many things which are suddenly changed all over, right? This pandemic has exposed them from doing business in a completely different way and running their business in line with what the customers are looking for. So as Zing has correctly said, so the banks are stuck in a situation whether they would first modernize their back-end core systems, or they will go for the customer touching apps and the channels to modernize that. So banks which have mastered this alignment are doing wonderful in that space. Like banks like DBS, for example, is doing good, and they're the digital bank of the world for the last 3 years. But it's not the same thing for many banks, and that's where the challenge comes. The platform approach as well as the channels, and this is becoming super critical. And knowing that Asia Pacific is the fastest growth market for wealth management and personal finance, digital finance management business, banks have to focus more and more on that area. So we are seeing lots of tractions on the ground, lots of serious discussions and POCs, pilots, everything is happening on the tech space across the whole region, across all sizes of banks.
Yeah, thanks for sharing. I think if I listen to you correctly, then basically you're saying that over the past few decades, banks have been introducing more and more technology, which we would typically talk about as being silos. That's channel technology, that's core technology, basically a mixed bag, if you will, which then leads to broken experiences. It leads to a pretty legacy type of infrastructure that's heavy, it's hard to innovate with, it's very hard to stay agile, meaning you're just playing in that spaghetti versus trying to make an impact, which is challenging, which very much resonates with how we look at the world as Backbase, where we're basically saying that you need to take all of those systems of records, all of your existing infrastructure, if you will, and move that into the new world by putting a system of engagement on top of it. That's what you were alluding to as well, where if you properly re-architect a bank around the customer, and only then, by basically unlocking the technology that you have available, by putting a system of engagement on top of it, that's when you can start to be innovative and again become very relevant to the daily lives of your customers. One of the major challenges for providing customized personal products would be around data privacy and the privacy appetite of customers. Is security/privacy a barrier to digitally transforming? Maybe a nice question for Basu.
Yeah, it's very valid question indeed. One side of it is seeing it as a barrier, private and personal information. But I think technologically, the companies, whether it is Ubank, who are the user of the technology, Backbase, who are also providing the platform, and say Microsoft, who's providing the infrastructure services or the cloud services, every layer of this is well protected, well secured, and privacy data is well taken care of. Unless you understand the customer's transaction behaviors and his search behaviors, it is very difficult to provide focused attention and a focused offering to that customer. So what Z was talking about, we define in Microsoft that as a digital feedback loop, where the customer's preferences and transaction behaviors comes back to the system through the channels. And then the systems are agile enough to update and modernize and provide back the updated level of information and services to the customers. And in this whole process, every layer of security is enabled to protect the privacy and the customer private PII data, as we call it. So I don't see a major risk. There is a concern. There is a mindset that this data may get stolen. We have seen in recent past some of those activities, but every technology company is working today to protect this data, whether it is data in rest, data in transit, or in every format of the data. So it will be a challenge, but we are seeing that people are overcoming it very quickly.
Clear. Mano, perhaps from your side, any concern on the privacy side?
Yeah, so customer data is very important. And not only its customer, but also the regulators have become very strict day by day. So any data breach, banks are penalized heavily. But we have enough tools available in the industry who takes care of the data privacy. And when customer doing transactions with some e-commerce site, third-party transactions, we always protect the customer data as much as possible, and then there is no breach at all on the site. So even though it's a critical, important topic, but banks take care of things pretty well.
What challenges do you face in attracting new customers? I think it's a great question because for us it's a real space on its own. We call it digital sales, which is all about account opening, customer onboarding, cross and upselling, digital lending, for instance. Quite a challenging space often. Basu, what is your perspective on the challenges there?
Good question, Nakul, firstly. Nakul, I'm assuming because you're in India, you may have used Paytm at some point in time. So for all the digital banks, the challenge starts with converting, if they have come from the wallet side of the business, converting the wallet customers into the bank customers. Because wallets are basically to meet your transactional needs, pay from A to B. But when you're talking about a banking service, the first thing which comes in mind, everybody's mind as individual, is the trust factor. How much trust I can put onto this new digital bank or digital entity with my money, right? So that's where, when in India, some of these wallet companies started transferring their license to a small finance bank or the payments bank mostly, they had seen some erosion of customers. That's the biggest challenge. And as Manu has nicely pointed out, the first important point for a digital bank or similar kind of entity is to identify which target customer segment I'm best suited for, right? No point approaching Gen X, Gen Y, Gen Z, and the post-retirement people, all the segments, which are typically approached by all the traditional banks because they have customer segments all across, all the age groups. So identifying whether the digital bank is going to be a purpose-driven bank, like banks which are into trade finance, which are into payments, which are into settlements, or it's a consumer segment-driven bank. That's very important. And that's the first challenge. And that's where I've seen Backbase's research work, where they help the banks to identify the target consumer segment or customer segment, and also help with a lot of tools to create those customer journeys, which finally will be on the platform. So you need to match all these stories together, your customer profile, the segment of the customer, their typical customer life journeys, and how this can be put and mapped to a platform which will support them in their whole end-to-end customer journey. So these are all the challenges which we see, and we have seen in the past. It's nothing new. We are seeing this for the last 3-4 years. So one is providing the whole cloud services as the underlying, which Backbase and Microsoft has come into a strategic partnership globally. So that's one side of it. Definitely, this partnership is very, very important and helps both the organizations to drive business. The other side of it, Microsoft over the years we run the biggest software as a service platform in the world. Many people don't know this, a whole modern workplace platform, right? And we have one of the largest Active Directory construct in the world. So we understand with our cyber security team and all how the whole security paraphernalia is structured today. And that's where for all these digital entities and platform providers like Backbase, we bring in complementarity on the security side of it, the data and analytics side of it, and also the whole cognitive services side of it, the whole AI ML side of it. And that's where we complement all our strategic partners like Backbase. And we see a great potential into this personal financial services, personal finance management space, digital finance management space.
See, it's basically first you have to discuss and find out what is the customer segment you are targeting at. And obviously it comes with a platform. And you have to plan which platform you are going to put across. And we are not into the old days where the infrastructure is placed in-house and you have a on-premise data center, all this stuff. Everything is a cloud now. So get the right cloud partner, get the right platform selected, then you start targeting the customer segment you're looking at. And every customer segment has need of working closely with them, and they want the latest technology. They want the consumer more close to the bank to offer products which is more close to them. And we have AI analytics, everything available. You can always find out what the customer needs and target the customer segment.
Perfect. It's quite some nice guidance already. For those in the audience, and especially for the person sharing the question, if you need support, or if you want to get key insights from the Backbase experts, we have a service called Strategy Consulting, where we basically take you by the hand and take you into the journey on understanding what is your go-to-market, what is your vision for the bank, how does your business model operate, and how does it actually sit within the specific region that you're looking to target. We call this value roadmap creation. We call it strategic consulting, delivering ROI overviews, creating business cases. So feel very free to reach out to your contact at Backbase to see if we can engage in such an activity. Why should banks work with fintech partners instead of building their own technology stack? I'd like you to comment on that, Mano. I see you nodding already and smiling.
See, yeah, I have been traditional in the banks where we used to have always in-house big development shops. But if you look at the challenges what the banks face by having in-house development, that it's very costly, we require a long time frame, and you require huge talent pool of people. And you have to continuously upgrade yourself to the latest tech stacks available in the industry. And in IT of a bank, difficult to keep the talent if you are not working on the latest tech stacks. People always want to work on the latest technology. They want to go outside and work. So all these three challenges is very critical for a in-house technology division in a bank. But if I look at a fintech partner, they can deliver the product with a lower cost with the latest technology. So it is a no-brainer. Why should I put so much money and effort, energy, and do something in-house which is not sustainable? Rather work with the fintech partner and get the product regularly from them.
Exactly. And also to add is, sorry team if I may, it's also to add is from a generalized approach, which as I said, the banks adopts typically, to a specialized approach, because fintechs are very focused. When they started their journey, they were focusing to a particular segment, particular business, particular product, whether it is wallet, digital bank. So they have that niche capability which the large organizations lack. So bridging this together is actually complementary to each other than competition. And that's why we see banks, any bank in the region, large banks, they are trying to be more having a partnership with fintechs rather than just competing with them.
So for incumbent banks, obviously they've been in the banking business for a while, and they are able to then leverage some of their unique capabilities. And if we think about what a bank is good at, right? There are many components where we see that they are quite capable of doing and where they differentiate. If we look at areas such as risk, if we look at things such as compliance, if we look at things such as looking at underwriting, for instance, or origination as a service, or looking at all the different types of capabilities that a bank can then put into as a service type of capabilities for other providers who might become a bank, for instance. So I did talk about Afterpay earlier, and Afterpay is actually using Westpac and also looking at using Westpac Banking as a service platform to go to market as well. So it is to leverage the capabilities that an incumbent bank has, and then to go to market that way. I look at Asia Pacific, where Standard Chartered's Nexus has also those types of capabilities to enable an e-commerce firm to then go to market. So I think banks, incumbent banks especially, have a very unique position in a way because they understand what's most difficult in financial services and what we always talk about. And I'm sure if you're from a bank yourself, is the regulations that are in place. It's a very heavily regulated market, and banks know how to navigate these types of regulations. So I think that's one strength that incumbent banks have. As for fintechs that are looking at building their banking as a service capabilities, they are known to be more agile, more nimble. They are all built on the cloud natively. So they seem to move faster and be able to develop capabilities a lot faster than the incumbent banks. And what they offer could be quite different in the sense that they could, get up to speed or can co-innovate much quicker than an incumbent bank. So the way I would see it is the main difference between these two parties is that one is very good at navigating that whole regulations piece. The other is a lot better in going faster to market, speed to market, and to co-innovate in that sense.
So if you look at the new bank space, we are the first digital new bank in Vietnam. There may be some new banks coming up, but end of the day, it's a product. So we have the best product available in the industry, and obviously this customer segment we are targeting. So we know who are our customer segments, and we are targeting them, and we are moving really fast. And we have a target of getting 5 million customers in next 3 years, so which is really good, and we are working at right pace. I don't think we have to worry about the competition at all there. And this PFM on the or digital money management is a good idea. There where we are focusing a lot fully on the side, and all our products are into fully digital money management. As you have mentioned a little before, we are interfacing with all the wallets and the payment players in Vietnam, so that we are the biggest payment product there available in the industry there. So this is the next step to go. Even though I can see a lot of cash transactions happening in Vietnam, unlike other countries, so slowly we are moving into the digital space.
In order to wrap up, I would like to ask the panelists to basically have one key takeaway that you would like to share with the audience as a key takeaway for today. Maybe you want to go first, Basu.
Go for the platform approach, which provides you agility and scalability. So select the platform judiciously, which is capable of integrating multiple APIs, which is capable of running data and insights inside, which can provide a comprehensive view of the customer. So all about the platform. Selection of the platform is super critical.
Mano.
Think about the product first. If you have a good product, definitely you will get success, and keep yourself in the customer's shoe. As a customer, if you reach out to the bank, what do you expect? Deliver to the same to the customer. Obviously, you will stay on the top of the world.
Great. And Z?
I would say iterate. Digital money management to succeed, it's both an art and a science. It's not just about the data that you have, but it's about also understanding behavioral economics and what sort of value you bring to your customers. So always, like what Basu has said before as well, that digital feedback loop, always iterate and learn from that.